Welcome to Seniors Finance USA. I'm David Miller, and I'm here to help you take control of your financial future with clarity and confidence. This channel is your trusted place for clear, simple, and practical financial guidance made specifically for seniors. Here, we break down important topics like Social Security strategies, common retirement mistakes to avoid, smart money habits, and proven ways to make your savings last longer. You won't find confusing jargon or unrealistic promises here. Just honest, straightforward advice you can understand and use right away. Whether you're planning for retirement, managing life on a fixed income, or looking for ways to stretch every dollar further, Seniors Finance USA is here to guide you every step of the way. Now let me ask you something important. Are you 65 or older? Do you own the home you live in? And are you paying the full property tax bill every single year? The same amount that your neighbors without senior exemptions are paying? Because if that's your situation, there's a very real chance you're leaving thousands of dollars on the table every year without even knowing it. And what I'm about to share with you today could be one of the most important financial insights you hear this month. Right now, as we move through March 2026, there is a critical April deadline approaching in states all across the country. And if you miss it, the government will keep money that legally belongs to you. Money you could have saved on your property taxes. We're not talking about a few dollars. In many cases, we're talking hundreds, even thousands of dollars in savings gone for an entire year. And once that deadline passes, there is usually no way to go back and fix it. So today, I'm going to walk you through exactly what you need to know about senior property tax exemptions, why so many people miss out on them, and most importantly, what you need to do right now to make sure you don't. Let's start with something that affects nearly every homeowner in retirement. Property taxes. For many seniors, property taxes are one of the largest ongoing expenses they face. You might have paid off your mortgage years ago, but the tax bill never stops. And for those living on Social Security or a fixed income, that annual bill can take a serious bite out of your budget. And here's the problem. Property taxes have been rising. Home values have increased significantly across most of the country over the past several years. And as those values go up, so do property tax assessments. That means even if your income hasn't changed much, your tax bill probably has. Many seniors bought their homes decades ago for a fraction of what they're worth today. But now, they're being taxed based on today's market value, not what they paid and not what they can comfortably afford. To address this exact issue, states created something incredibly important: senior property tax exemptions. These programs exist in almost every state, and they are specifically designed to reduce the property tax burden for older homeowners, especially those living on fixed incomes. In some cases, these exemptions can reduce the taxable value of your home. In others, they can freeze your taxes so they never increase again. And in some situations, they can even provide direct refunds or credits. These are not small benefits. These are some of the most valuable financial protections available to seniors today. And yet, millions of seniors miss them every single year. Not because they don't qualify, but because no one ever told them. Let's talk about the first major issue. And this one surprises almost everyone. These exemptions are not automatic. Turning 65 does not trigger anything behind the scenes. No government agency sends you a letter saying, "Congratulations, you now qualify for a senior property tax reduction." No one files it for you. No one applies it to your account. Nothing changes unless you take action. You have to know the program exists. You have to find the application. You have to gather your documents. And you have to submit it before the deadline. If you don't, you pay the full amount. No partial credit, no refund for the months you were eligible, no second chance in most cases. That money is gone for the entire year, and the system will not remind you. It will not warn you. It will simply accept your full payment and move on. Now, here's what makes 2026 even more important. There have been major expansions to these programs, and most seniors have no idea. Across multiple states, new laws have increased exemptions, raised income limits, and expanded eligibility. That means even if you checked before and didn't qualify, you might qualify now. Or if you're already enrolled, you might be entitled to much larger savings. For example, in Texas, a major change passed with overwhelming support increased the senior school district exemption dramatically, from $10,000 to $60,000. When combined with other exemptions, some seniors can now shield up to $200,000 of their home's value from certain property taxes. For many people, that can eliminate a large portion of their bill entirely. In New York, new legislation allows local governments to offer senior homeowners exemptions of up to 65% of their home's assessed value, significantly higher than before. In Illinois, income limits for senior freeze programs have been raised, allowing more seniors to qualify again, especially those whose only income increase came from Social Security adjustments. And in Massachusetts, there's a powerful tax credit available for seniors whose property taxes exceed a certain percentage of their income, putting real money back in their pocket. These changes are happening right now, but again, none of it matters if you don't apply. Now let's talk about another hidden risk that catches people off guard. Even if you already had an exemption, you might have lost it without realizing. This happens more often than you think. Property tax exemptions are tied very specifically to your property, your name, and your filing status. If anything changes, your exemption can disappear. If you move to a new home, even nearby, you must reapply. If you refinanced and your property was placed into a trust, your exemption may have been removed. If a spouse passed away and ownership changed, it may need to be refiled. If your county required a renewal or verification and you missed the notice, your exemption could have been canceled quietly. And here's the problem. You usually don't get a clear warning. You only notice when your tax bill suddenly jumps, and by then, it may be too late to fix it for that year. Now let's talk about something even more powerful than basic exemptions. And this is something many seniors have never heard of, the senior freeze or tax ceiling. This is one of the strongest protections available. Instead of just reducing your tax bill once, it locks it in place. That means no matter how much your home value increases in the future, your property taxes stay at a fixed level. In some states, this can last for the rest of your life. Imagine that. No more worrying about rising assessments, no more surprise increases, just stability and predictability. Programs like this exist right now, but again, you have to apply. So, what should you do next? Let's walk through it step by step. First, find your county tax assessor's office. You can usually find their contact information on your property tax bill or with a simple online search. Second, ask them about every senior program available. Not just one, all of them. There may be multiple options you qualify for. Third, confirm your current status. Are you enrolled? Is your exemption active? Does anything need to be renewed? Fourth, gather your documents. Typically, you'll need proof of age, proof of residence, and possibly income information. Fifth, submit your application before the deadline. Do not wait until the last minute. Deadlines in many areas fall in April, and missing them could cost you a full year of savings. Sixth, if you missed a previous year, ask about retroactive options. Some areas allow late applications for past savings. And finally, set a reminder for next year. Make this part of your annual routine so you never miss out again. Let me bring this all together for you. You worked hard your entire life. You paid into the system. You earned the right to these benefits. And right now, there are programs specifically designed to reduce your financial burden. Programs that could save you thousands of dollars. But they only work if you take action. The deadline is real, and it's close. So don't wait. Call your local office. Find out what you qualify for, and make sure you're not leaving money on the table. If you found this helpful, make sure you subscribe to Seniors Finance USA. Every week, I share clear, practical information designed to help you protect your money, avoid costly mistakes, and make smarter financial decisions in retirement. And if you know someone who could benefit from this, a friend, a neighbor, a parent, share this video with them today. Because one simple action could save them hundreds or even thousands of dollars this year. And before you go, I'd love to hear from you. Leave a comment below and let me know where you stand. Have you already applied? Are you planning to? Or is this the first time you're hearing about it? This is for educational purposes only and not legal or tax advice. Rules vary by state and location, so always check with your local tax office or a qualified professional for guidance specific to your situation. And I'll see you in the next video.